episode 6, and we are going to run from 9:45 to 10:30. My schedule has been in a little disarray for some great things that we have going on behind the scenes here with Trelia, ERG, and KW City Views with KW Commercial. So we're excited to be here today. We are ready to go. And today, with the live foundation of real estate, especially when you're an agent or you're a property owner in the marketplace and you're looking, what else can we do? How do we partner with people? What's that framework look like? How has it been successfully done? Well, I got you covered today. And today we are going to look at capital raising and investor pitches for real estate, something that you have to articulate properly and understand clarity for, especially if you want to own real estate and to be able to leverage that as a business where there's an income and an expense. You have tenants pay down debt while you can appreciate the equity in the asset. So today, discovering the secrets to effectively raising capital and pitching investors for your real estate ventures. Let's dive into it today. Now, on the first slide, right behind me, if you can see, there's timeline with achievements and milestones. A lot of what we do and what we structure would be towards an exit. Because if you're having a real estate partner or partners, maybe not everybody wants to hold it for the rest of their life and then all of a sudden give it to the kids, right? Maybe they want to have a 5-year strategy or a 10-year. You talk about private equity, it's a common thing. When they look at it, they're looking at the dispositions, they're looking at when they're going to get out with appreciation involved, tenant debt pay down, or let's just say a new building being built and what that looks like stabilizing. Those things are going to change, but having a framework and a structured outline as to what that looks like will give you, your partner, your partners, your board of directors, your investor, whoever it may be, an accuracy as to it. Now, are these subject to change? Of course they are. But at least you have a skeleton in place, and then you can start revising as you need as you go through that continuum. One of the biggest things that we have is understanding clarity. So if you say, okay, we're going to target a market in 5 years, that's going to be on or about this, maybe you time the market a little early because it's bullish and you're nervous it's going to go to a bear market. Or maybe you time it a little bit later because just holding on a little bit longer with lower debt rates a bit so you can get a better price and untap that equity for your shareholders. So it's strategy driven. And that's what we're going to dive into today. So first things first, when we start talking about where we're at with here, okay, sorry, this wasn't, there we go. So viral cold hook open. When we start looking at it, you're going to look at 3 buckets: the power of the capital raise, the key episode and the takeaways from today, and the transformative mindset you got to have in an approach with. Because if you don't have these items, good luck. Probably going to have a good meeting, but it may not be the one that you want to actually seek the investment. So once you learn how to raise capital deals start chasing you instead of you chasing deals. That's one of the biggest ahas I learned in real estate. When you start going into a field and you're getting successful at it, you get what the momentum is, you're going to get other people that want to join you on that ride. They're going to see it and you start proof of concept. You do it 1, 2, 3 times. People are going to be more apt to want to join that because they see that proof of concept. And that's one of the biggest things. Then all of a sudden, people are coming to you instead of you having to go to them. And that's a great lead gen tactic. Number 2, key episode takeaways. We're going to look at the credibility, clarity, and proven systems to structure pitches, handle objections, and raise the millions of dollars that you need. With simplicity, which research shows, with wording that can help you articulate it, you're going to be able to say what it is that you're actually showing to an investor. And some of the biggest mistakes I've ever made was you get so excited, the paths and the math and the theory behind this is really more so towards what's the plan? Is it written? What's this org chart look like? What's the experience of the operator, operators, etc. So you got to get clarity and then you can start pitching and the mindset around it. You don't have to have money to start, but you have to have the right strategies and frameworks with your mind. If you understand the way that money works and you understand the way deals operate and where they sell at, because you've been in the marketplace maybe a decade, 5 years or 2 years or a year, you know where the numbers are. If you know your exit and you know your entrance, you can build in that middle, whatever it is that you seek, chances are you're going to have a high success ratio when it comes to real estate investing. Now, one of the best things over the years here, guys, is that real estate appreciates. Now, maybe you can say, oh, other fields appreciate so much more. Well, that's great, but there's different advantages that real estate has. And those things are going to be the appreciation of the land, the tenants paying the debt down, tax reasons, and so many others. So when you start looking at it, take your investment strategy and make it as useful as possible for your goals. If you're looking at real estate, look at it as a wealth builder. It could be a generator of income or long-term passive that you give to your children. It's going to be strategy though. So transform your mind into what strategy that you want to implement, what your goals are. Now, what we do here, we unpack the back from the front, because if your goals are X, then we're going to unpack strategies that attach to those goals and they intertwine together. Then you build your lead gen base. So let's say that you're an agent in the marketplace and you're looking at getting into fix and flips or buying multifamilies and holding. Chances are you're probably going to know, well, how much does it typically cost to renovate this amount of square footage of a house? How much does it cost to buy the multifamily, get the debt, and then what's the cash flow left over? What's that return like? These simple metrics you're just going to have to understand right out the gate, transform your mind to it. Your success will go up. You make more money impactfully. If you're an agent in the marketplace, the wealthier you are as an agent, the more that you can practice what you preach. And when you put it out there, people know this guy is for real, this girl is for real, they're doing it, and then I can do it too. And that's something great, entry level, or if you're proven already in the marketplace, you want to do it with somebody that's already done it before. So make sure you get somebody. It could be a mentor, it could be another agent in the marketplace, it could be family members, but somebody's going to have to unlock that potential. Now, moving ahead here, Raising Capital, great book. Hunter Thompson, Raising Capital for Real Estate. It's a great one. There's many others like Venture Deals, etc., that you can read and you can understand, what are they looking for? What is the process like that I should show them? From pitch decks. Years back, pitch decks of mine were 30 or 40 pages. With all the knowledge that you gain and understanding, 10 pages, virtually all you need. You just got to be so simple about it and your approach. So understand that a little bit of books, a little bit of education to get behind it. If you don't have a Wall Street background, you don't have this finance background that would propel you, a couple of quick books really will just get you all that you need. And then you got to make sure you're in the rooms with the right people. All right. So moving on, we're here. Why do investors say yes? One of the big things investors say yes on is with direct clarity and an exit strategy. When we work with our investors, we're going with a proper plan, with a professionals team around it, and with an exit strategy that's economically healthy. What does that mean, Bruce? It means we got a plan and we seem to think that it's going to work with high probability. Bottom line, if you have a plan with high probability, a great team around it, chances of success are at its highest level. Now, that also means that the investor believes in the team because of that vision. So why do they say yes? Research has shown because of clarity, and also the ambition and the excitement and all of the good feelings towards it are there already, but it's got a logical plan that's based around it. And then an executable plan that's going to be taken for the next 3, 6, 12 months. All right. So moving ahead, 3 types of capital structures. You have the equity and the owner side, upside. You've got a debt, a fixed return like a pref. You got a preferred return model, which could include waterfalls. It could include a lot of different dispositions depending on your negotiated strategy. Let's dive into equity and ownership right out the gate. So the pros in this is you get big returns and you have aligned incentives. Huge, right? But the cons are diluted ownership and more oversight. So when you have a partner and they become an active partner, you don't want them to be active, you can have an issue depending on where that structured deal is for that equity return. Now, if you're operating, you're running at a high level, the last thing that you want to do is have somebody come in with their point of view when they're not in your expertise. Now, could they add value? Of course they could, but they're not going to do it if you're the ones that are proven and operating it. They can only mess you up or distract you unless they're adding value in said specific transaction. What does that look like, Bruce? Well, if you get an equity partner and they're a contractor, that's different. Maybe the contractor then is partner because the costs are less and they do it at a cost basis. And then they share in the revenue upside based on that. You negotiate a deal around that. Or maybe it's a contractor and you hire them out and it's totally then paid by you and your equity partner. But let's say the equity partner wants to be on site every day and manage everything. It's an active partner. Do you want to have to deal with that? That's the structure that we're talking about there. So understand what that difference is and how you operate it. Fixed returns, prefs. A lot of this in the marketplace is pretty standard. You get something where it's, I'm going to give you $1 million and you're going to give them 15% back in 12 months, 24 months, whatever it is, it's annualized returns. And then that's what the dates are. Pretty simple, right? Pros are that's predictable. No equity dilution. It's you 100%. You have to pay them back on the said return in your said time. Now, cons, it's higher risk for the investor and there's limited upside. So depending on your economics on the upside of this, fixed debt is great when you've got gigantic upside, especially then because you have a fixed item that doesn't have an equity. You're not taking a percentage of our deal. We're paying this because we know that we can do this and our chances of success are high. So we're going to have a big multiple at the end, pay the pref return, and be done with it. And that's a great thing. But always remember, you have the risk. If you don't succeed in that, your pref return, it's not like an equity. You have to pay them back. It's a silent partner. So understand debt and fixed return and what pref is. Preferred return models, investors get paid. Could be the first thing where it's a waterfall. Investors are paid all profits first, and then you're paid out, and it could be in an equity or fixed debt situation. Or you could put parameters around it, like i.e., if we get this property to sell over $2 million, every dollar above $2 million, you get an extra 10%. It's creative. We've also done other deals where it's literally you get a pref, and then let's say that there's a small equity split based on evaluation. We can hit that, then you can get some too, and it all works out. So those models are going to be where we see a lot of it. Now, you could get a syndicated model and a multifamily and do that. It's one of these, just a different way. So understand 3 basic models.
Quick question on the last one. Why is fixed debt so risky?
You have to pay it back. So when you have an equity partner, you're partnered with somebody that has money as well in it. So you have less. If you have 100%, maybe you're at 50%. You're at 50% risk. So you have a partner with 50% risk as well. Pref is if you go out there, take $1 million, and let's say that building doesn't get built properly, it's having an issue, takes longer, you're still responsible to pay that debt back. And if you don't, you can go in default. Equity partner, chances are you're not going to go into default because his returns are tied to your project.
Got it.
Big difference, the risk of that associated. So understand, if you're going to go equity partner, it's less risky. If you're going to go just pref, it's more risky. Different spreads.
That's why people invest with multiple partners, because it dilutes the risk.
It could, yeah. I mean, people take partners on for dilutive risk, dilutive economics, dilutive virtually everything, or strategic. If you can find a partner that you have complementary basis around, that's where I've seen and research has shown the highest level of return is, because then you scratch each other's backs on your strengths. I.e., when I look at it with Jason and I are total complements in that regard for that. Adam, you and I are very complementary. We're able to work together within those same frameworks and understand how to operate. Same thing, guys, with anybody here. What you want to do is understand who yourself is, who a potential partner would be, who is somebody like a running mate, who's somebody that's going to go long-term with you, investor-wise, partner-wise, business-wise.
What's an investor, like somebody that you, like, so if somebody's very similar to you, you typically wouldn't invest with them, or what would it?
Not really more investing. It's more if you and I are going to do a fix and flip, I don't want the same personality behavior as me. You follow me? I want somebody that's going to be complimentary to me to cover my back.
Yes.
But yeah, but with a foundation of the same. So in my opinion, research has shown if you have the same foundation, principles, morals, ethics, etc., as a foundation, but let's just say you're raised differently, have different personalities, these things will change. You're going to be sometimes more compliant, right? Janine's the most compliant person that we know. She just is aggressive towards compliance. You follow? Those types of personalities, we don't want them in the field. We want them behind, making sure they're getting compliant things in order. You get a social butterfly out there, you don't want to put them with another social butterfly to do that, because chances are everything else behind the scenes isn't getting done. So that's where I say, or if you hire people to do it, that's where I've seen a lot of mistakes happen, where I've made my own mistakes and where I've changed those ways to make sure that the strengths. Reading a great book called Strength Finders. If you guys ever get a chance to read it, read it. It's enhancing the strengths.
So it's kind of like how do you say, like the octopus?
Ooh, tell me more about that.
Like with the tentacles and stuff, like there's one main organism and then got the tentacles
Oh, yeah.
to reach out.
Yeah, well received. It allows you to be able to cover that. So if there's 8 buckets and I can only cover 3 or 4, maybe I can get somebody else that covers those other 3 or 4 that I know based on their choices each day, on the project, on who the contractor is, that it's the highest believable, highest probability. So in that same regard, when we look for things, when we're going for a new sign installer, Adam, right? What did we do? We had to go through how many sign installers did you reach out to?
A lot.
A lot, right?
Yeah.
And I trust you, and I know you know a high level of standard. So I know when we came back and you said we got a recommendation for it, knocked it out of the park, right?
Yeah.
Same, yeah, same thing. So imagine that in a different side of the coin. So if you guys are out there in that side, especially with wealth building and investment, you want that. If you have the same thing over and over, you're duplicating yourself. You're probably going to have a good time hanging out and things like that. But who knows where the other side of that coin is going to be? So that's where I've seen that. Answer the question properly for you? Accurately? Awesome. My pleasure. Moving on. So what investors care about? Guys, they're going to care about capital protection, downside risk, your track record, your team, timeline, return structure, reporting, and your exit plan. So let's talk about capital protection. So they want to make sure that their investment's secured. So if you have tangible real estate, typically you can get it secured on that. That's a feel good, right? Here's the building, the brick, I can touch it, I can go to it. It's great, right? It's the exact opposite of the stocks and bonds. It's like you get a piece of paper. So those things are major differences. If you're into tangible real estate, you like that, keep going because it's something that you can then use. So protecting capital just right out the gate is going to be investing in knowing your numbers. So path in the math is what we teach. So protection always comes from those numbers. Thank you, Adam. Downside risk. If when you don't understand your potential risk, it's because you haven't done it enough. What I've learned in time is that there's some times that you can get a little lucky. You don't know what you don't know. But if you think that you know everything going into this and then you don't have expertise around it, chances are you're probably going to make a mistake. That's where we made mistakes early on. So now even with a high level of probability, you're still in a potential risk. Nothing's it's not guaranteed. It's virtually guaranteed when you go through your structures if you do it right. And that's it for anything. You buy multifamily at a competitive rate, in 10 years from now, you're going to be up. The debt's going to be paid down. It's natural progression. It's not a big aha surprise to anybody if you understand numbers. So downside risk is just, again, knowing the numbers, knowing what the bullish and bearish markets could be over time with your strategy. So if you say, we're going to hold this thing for 5 years, and you know that 5 years of debt pay down is going to be happening, and you know that 5 years of appreciation is going to be happening, you can renovate the apartments in between, and let's say get an extra 1,000 a unit, and all of a sudden it turned into a cash flowing multi-family with large equity. And all of a sudden, 5 years later, you sell it, you make a couple of $1 million, the shareholders get paid, you make your return, you go on to the next one. Could be a fix and flip. You buy it, you want to renovate it, get a contractor, boom, 100 grand in, you sell it, you make a few hundred grand, you move on to the next project. It's as simple as that. That's really what it comes down to. So what does the market look like? Capital protection, downside risk. Market's a great market. Guys, we're in Bergen County. Average sale price is damn near $900,000 right now. This is wild. Now, we're trying to combat that and build so much and bring so much inventory to our area to lower these pricings to get more competitive. It's something that we need. So what do we look at? Track record and team. We want to advance communities. Australia is creating tomorrow's neighborhood today. So what are we focused on? Making sure that homes are being prepared in this area for the proper baby boomers, Gen Zs, Gen Xs, et cetera, as they're going and living. So what are we looking at? Our team is this. This is us. What is your team? Who do you have in your network? Which is why we always say, know your vendors. I always practice, make sure you know vendors and just go A, B, C, D, E, F, G on every vendor and put a list together, because when you need somebody, you're going to reach out. And you need to be able to say, hey, you'll take my call within 5 or 10 minutes? Sure, great, because when I bring you listings, when I bring you this, I need that service back. It sucks when you get that and all of a sudden they don't do what they're supposed to be doing. That's the discount of where it's like, I got to go to another one. So these fields always understand, sometimes people get busy. You don't hear back from a town planner for a week, 2 weeks, 3 weeks, probably busy, right? If you don't hear back from your attorney, set expectations to other people then about that, and then pivot away, get somebody that you know will be a little bit more responsive, right? So track record in your team, make sure legal starts, in terms of this, maybe it's a fix and flip, you need a legal team, you need a contractor, you need an inspector, you need somebody that's going to go through the entire outside, landscape design, things like that. Put your team together, get a cost budget around it. What do we buy it for? What do we sell it for? Is there profit in between? What does that look like? Encourage you to thoroughly inspect the expenses, because most people don't predict it. They don't predict the debt service that they have. They're going, oh, we're going to make 100 grand, but they didn't realize their debt is 30. So it's really 70. You follow, incorporate this all in so you can get a clean net number. That'll help you be more impactful, especially when you understand your numbers, because you can do it quicker. Okay? Timeline. We started on timeline early on. Timeline would be looking like this. we're going to buy this. It's going to take us 3 months to get through the permits and get everything demoed, 3 months to get through the renovation. We're going to have it on the market for spring, which is the hottest market. We anticipate a price of this. It may be this if the market doesn't bear that, or it may be this high price if we can leverage that and really get it. So that's our numbers. Either way, we're profitable. We're able to pay our debt. We're able to pay the contractors. God forbid we have a 15 or 25% spike in our costs. We have that built in already. And you don't look at it from the other way. And all of a sudden, you made $95,000. You worked on your next deal. You take that, you dump it into the next one, and maybe you do a 1031 exchange, and maybe you do some other strategy. Those are what we're talking about, right? So timeline, make sure you understand clarity around what you're looking at. What am I going to buy? What am I going to invest in? What's the time frame around it? Return structure. Return structure looks like this. I'm buying a property, fix and flip for $400,000. I can put $150 in. Holding period of 6 to 12 months. I can put it back in the market and get $1 million, right? So all of a sudden you're looking at it and saying, wow, the return structure is pretty high. So now let's look at it and say, well, what's the best debt structure to work on for that? Because that's where you're going to want to then choose your debt structure. Because if you have a high probability of success with a large monetary return, maybe you go pref instead of equity. You're like, no, I just want to take this amount, get it, because I know I'm going to win, and I can pay you back 3 times over, really, if I wanted to. I just got to get this thing right. So that might be where you then work backwards and you say, okay, best debt rates, best structure. And that's how we do it. And if you work backwards, you pretty much know where the forwards is. You follow? Because you're designing each step of it. Now, what does it take? It takes brain power. It takes understanding things. It takes studying. It takes education. We have that here for you. We're all here trying to teach. I give everything of myself to everybody on every single day to make you guys better, educated, and wealthier, inclusive of myself. I take this ultra serious for every one of you guys, and it's a lot. But if you just take it step by step, it becomes something that is just naturally in you. If you see opportunity and you want to bring your family involved in making the next step of 3 and 5 years something different, it's going to start with something of wealth building. So if you want to be a great agent, be a great wealth builder for the same people that you're servicing. Great quotes are, if you want to make $100 million, make somebody else $1 billion. Right? Find a client that you know can do that, and then eventually get in there with equity. Say, hey, we've done 5 projects. I made you a lot of money. Next project's off market, 5-10%. I'm looking for that. I'm going to own it as an operator, and I'm going to throw my commission in and do that and make, instead of 28,000, you made 102,000 on that. This is where you get smart. This is where you want creative people around you that have done these deals before and that can train, understand, and talk at a high level. Because if you're not, you're just going to be a student. I'm encouraging everyone, don't be a student. This is not a student-teacher game. This is an active game where you bring then what you're doing, and we all win together. And that's how you're going to succeed, and I'm going to succeed as well, and teach everybody what to do is by actually doing it. Reporting. Investors like clarity. So what we do is we set up reporting dates for our investors, and we understand certain things. Now, is it perfect? No, but we built trust with that, which is why I'm telling all of you guys, if you build trust with the people you're working with, they know that you're working on the goal. The goal is to be had, and if they ever need you, pick up the phone and call. And every single one of them know that. So that's the same way you guys want to be. Now, is it a pref, equity? Is there a waterfall? Is it a different structure? Well, that's on you, and that's your communication lines that you set up for each one. It's the same thing. I mean, imagine we're selling a property and somebody wants to set it up every week, 2 weeks a call. Now, yeah, chances are we're going to hit that call, but there's going to be some times where we don't. And that's just going to be flexibility that's needed. Same thing here with reporting. Same thing, guys. It's all about communication. And that's what I stress to you guys. You don't have to be perfect. You have to communicate. Exit plan. Investors want to know, hey, I'm going to be able to make money. So if you're 400 with 150 in is at $1 million, and an investor sees it and sees these comps in the marketplace as that, chances are they're probably going to be pretty comfortable, right? Imagine they lived in the marketplace, that they knew that the deal was had, and they understood the complexity of it, and they realized, wow, you found a great property. You know, this is a great thing. Then all of a sudden, now they're on you. They want to do it. You have to bring the value though. You have to bring the value of the property. If you bring the value of the property and you bring the money, there's really only 1 or 2 other items left on the table here. You follow? And that's where I'm saying, if you can enhance value and have somebody then complementary enhance that same other value, what does your business look like for your wealth building as said myself? because I want every one of you to succeed. And this is about raising capital with a partner or with somebody else that you want to take a prep on and saying, I got a great thing because my knowledge, my education over the last 1, 3, 5, 10 years shows this is where I can bring it to, and this is how much time I need. Would you be willing to invest in something like that? Seems like it's a good opportunity. And that's what we do. Okay.
Question.
Yeah.
How quickly do you think you can like look at a piece of property and be like, okay, so I don't think there's room for potential with this property, or I think this can be done with this property. Like I think this sort of upside is possible with this property.
It's a good question.
How much faster have you gotten at that, like over the years?
Extremely fast. So rules of thumb, Adam, that's where we really have the best things. So guys, rules of thumb right here in real estate are if you're selling a new construction property in the marketplace, think 1/3 of the price. Single families all the way up to 4 families. One third of the price. It's 1.5 million to be sold. Purchasers are at 500,000. Go ahead and test this in your marketplaces. This is roughly the rule of thumb that you'll always see. So Adam, somebody comes to me and says, hey, I got a duplex lot. It's $1 million. I know off the bat, well, what town is it in? Okay, it's in Cliffside Park. It's too high, because if a duplex sells for 1.5 and 1.5, that's the 3 million I need for the one. But they don't. Maybe they sell at 1.2, 1.3. So then we look at it and say, okay, 2.4, 2.5. What is that? What should that be? 800,000-900,000. You follow me? That's where we start getting rules of thumb, and you can do that quickly. So if I'm going to go on a listing with things like that, especially in development, I could do this in 2 seconds like you guys could. Really just follow the simple pattern. Price, new construction, divided by 3. That's the virtual acquisition price. When you start going into returns on like larger sites and things like that, that's when your rules of thumb start going into acreage. And you start going into how many acres is it, what's the DUAs, which is the units per acre, and how do we go about what this plan is with the town. Now you can do that. It's a very complex thing, but if you built it up and you said did a 2-family, then you did a 4-family, and then an 8, you're going to naturally grow into this, which is no different than what I did. I'm sitting in a room where I was studying and learning every single thing. So you guys could too. But once you do it, you want to execute it, help people out, and then you realize, wow, these could be partners. These could be the next site. This could, there's a lot of hybrid when you do that. Pretty good? Okay. All right, so the 5-minute pitch that raises millions. Guys, this is the 5 steps that we use, and it's the problem and solution. Virtually so many other people are way better at teaching how to pitch decks and how to do all of that. It's such a better format than myself, but I've realized it comes down to these 5 things: the problem and the solution, the opportunity and the roadmap, the team, the numbers, and then you got to ask. And when it comes to the ask part, that's where most people fail. And a lot of people are scared to do it because they don't have step 4, 3, 2, and 1 done. So I'd encourage everybody, start with step 1. Think of it really simple. What's the problem? What's the solution that you can figure out? For us, there's no housing. And we can solutionize around housing. So our problem is we don't have enough housing. Our solution is we're going to provide housing. What's yours? If we're creating tomorrow's neighborhood today, what are you guys doing? Are you taking capes and making them colonials? And that's your buzzwords now? Because I almost wrote an ebook on that, and it's flipping houses. I think it's great in the marketplace. Somebody else should take it. Capes to colonials are a beautiful thing. I buy Cape Cod homes and I make them colonial homes. Capes to colonials. My name's Bruce Elia. I mean, these are simple things. If you just start putting out there, or you say to somebody, this is what I want to do. Do you want to join me on that version of the mission here? Do one. Do you have an extra time, money, solutionizing brain? Like these things you want to go through. So problem and solution. Opportunity roadmap. What does it look like? Guys, if you're in a town and you start seeing all these new developments come in, what does your opportunity look like? It looks like you have a big opportunity. The reason I say that is because other people are investing a lot of money. If they're willing to do it, especially institutional capital, maybe there's something they know better. Okay, I know I'm not the smartest person in the room, but a lot of other people are smarter. And when I see institutions come into areas, it means they've done all the research. Just if you see these giant buildings going up around you, think somebody else has done research and said, this is a very good product for right here. And that means somebody's going to rent it, buy it, and they have the money to do so, which means average median incomes, which means areas, things like that. Now, if it's in a turning over area, pioneers, man, that's where a lot of money is untapped. You get into an area, 5 years later, that area is completely changed. Guys, we've seen people turn $1 million, $2 million properties into 20, 50, $70 million properties just by owning certain areas in New Jersey here. So land banking stage, right? When you own something, that could be something of a theory too. The team. When you go into a team setting, that's when you're going to be bringing confidence. Because let's say your investor just has you. Well, what if you just don't show up that day? What if you're sick? What if something happens? What happens to his or her money, right? That's not a pretty good way. Think about it if you wanted to lend the money. That wouldn't be a good way. One person, well, where's the parachute here? What if you just don't show up any longer and I'm done? Do you have collateral? Is there any other way? These things are going to be the conversation then. So understand, I'd rather bring a team to the table of competent operators that then can get a mission done. That's where I've seen success and people raise the most amount of money. This is exactly the same theory that we're following. And then the numbers. Make sure the numbers are good. If you understand your numbers, you're going to understand where the exit strategy, the opportunity, it'll propel you with your wings to go up in the air and go jump after this because you see it visually. I sold 5 of these properties last year at this price. I got an opportunity to buy this at a 60% discount, 40% discount, 30% discount because I'm in the marketplace and I saw this person, their family member passed away, they have a estate sale and I got to it first. Boom. You sold it. When somebody looks at you in the eyes, they're going to know the person sold it. They know. And then the comp show, everything. Hey, yes, I like this. I want to do a rev share instead of that pref because I like it. Now you're negotiating with your investor, right? That's what I'm talking about. Numbers. And then you got to ask. You got to be able to ask for it. We're strategy driven in who we want to partner with money. We don't want to take anyone and we don't. And that's the whole purpose. You want strategy. You want strategy. You want strategy. It's never coming from a need. It's coming from do you see the same vision? Do we have a partnership in line? How does everything else look underneath the hood? Which is why I'm very resistant in getting into business with people, just the way you should be too. You have to understand who they are, what's going on, how to operate through that. That's going to be a critical item. Because if you think somebody for 6 months is just boom, and all of a sudden changes, then you don't know what to do, right? So make sure when you start going through people's timelines of who you want to invest in and what you're doing and whatnot, just look at their past of what it is. Look at that. And then look at where they're going in the future. It'll help you give an idea of whether or not you want to do it with them. And I mean that because you never know. Look at it and say, maybe they're not the right partner now, but maybe in 6 months or a year they are. That's what I'm talking about by kind of almost building your bench, so to speak, at that. Okay. Objecting handling. Okay. So we put 5 objectives on here, just simply put, to understand that you're going to be just like a listing appointment, having to have objections. Okay. All the slides on here are available and we'll have them circulated as well. So rest assured there. All right. What if the market crashes? What if you don't lease it up? Why should I trust you? I need to think about it. Is this guaranteed? Great questions, right? When you're understanding your marketplace, you're understanding your investment, just understand you're going to get probably 3, 4, 5 questions that are going to be pertinent to what it is that you are going for. And you should be able to respond pretty easy. That's going to be where you see success. And if you don't, and you stumble on these, somebody else might say maybe they're not as prepared. And that's not going to be somebody that wants to write a check for X amount of dollars. They're going to want to see the one that's very prepared, ready to go, has the team in place, and is ready to deploy it. Right? Research has shown that's the most successful parts. Okay. Also remember, never say guaranteed. Always virtually guaranteed if it's that good. Never say guaranteed. I learned that many years ago. You never want to guarantee because guaranteed is nothing. You can walk out the store and you're not guaranteed anything. So never guarantee anything. What you say is a virtual guarantee, and what you say is we have the highest probability of this based on reasoning, based on facts. It makes sense. And I'm passionate about it. We can get it done. We've done it before, or this is a new venture, but we're in the field and we have a low risk based around this because of X, Y, and Z. So think of if you can defend yourself and be passionate, kind of like forms in the mission, chances of you expressing that to somebody and having them receive it in a manner that's well received, transparent, genuine, you're going to have to check the boxes. Okay? Moving ahead, mastering the art of capital raising unlocks the door to real estate development and wealth building. By applying the strategies and framework covered in this episode, you're going to confidently approach investors, structure deals, and your real estate dreams become a reality. I know this because the same thing that you guys can do right now is the same thing that anyone could, which is find a real estate deal, know your marketplace, and then attack it with great kindness and compassion, because the people that are going to buy that thing are going to love the home that you build. If it's a multifamily, live in, etc. And when you give it a little extra, it's what extraordinary is. And that's what we mean. So when you're going into a development, you see that little difference of the work, that's the trim and the light and the special intricate flooring that's maybe a little unique, in the countertop with the pull out and all these little features. That's the difference of what that builder renovator did versus the other one. So what stands out for your mind? In ours, we look for coveted things to do as our, who are we, how do we go about it? So you should too. Commercial versus residential, big differences here in the way that you would raise capital. At the same point, understand they're foundationally the exact same. It's a building, it's a property, it's a vision. Okay, so understand those differences and get ready. Next episode, we're diving into the deep math behind underwriting. We're going to be doing multifamily underwriting, mixed-use underwriting, and what that looks like, how you can value a building, how you can take a listing appointment from that, and everything else in between. So we're going to open it up for the next 5 or 10 minutes, and we're good to go. Thank you for joining me today on Real Estate Rewired Live with Mastering the Art of Pitching and Investor Capital. Opening it up. Yeah. All right, I was trying to stay on track with this, Adam.
Getting better every time.
Every better, getting better. Guys, what does it feel like? A little scary out there? Ask somebody for money on a vision that you have, a dream.
I haven't started doing that yet.
Let me ask you a question. Who's done it here? Has anybody done it? Anything. Has anybody raised money for a business?
I tried. I didn't get it.
Okay. What happened that you tried but it didn't succeed?
I was trying to do the vape business with one celebrity. He was giving me a couple of millions for that, but then too much regulation, so that he and we decided not to do it because he became very strict.
Okay. Is there another business or something else that you could that's less risky?
I was thinking about one, and I was going for it, but then I decided not because
You're right there, man. You're right there.
the problem, I had the money for it, but the problem is I didn't think I'm enough experienced to take it.
Okay. Appreciate the honesty. I think that maybe you made a right choice, depending. Maybe it could work. You know, obviously, dumb luck when you look back, it could, maybe not. But I like what you shared because it seems honest in the approach of you taking on too much risk, which is why when we're describing here, guys, know your product, know what it is. You know, I'm not going to dive into another business and start raising money, doing something for other things that I know. I'd encourage the same with you because maybe that could become the reality. You're in real estate, you know this product, you got something instead of a vape store, it could be this building, and the economics around the times are pretty good right now. You know what I mean? And you massage that because always remember, people forget real estate is a business. When you own a property, it's a business. It's an income and an expense, and you have a net profit afterwards. So same thing any business does, right? The office we're in, everything has an expense and an income, and what's left over, right? That's hopefully why you run the business. Bryn.
But can you ask the question to the mic?
Oh, it wasn't really.
We got upgrades here, right? Real Estate Rewired. All right, we got a passing mic, guys. We got a passing mic right now.
So I was saying I could relate to him because I had a client in the past that I was like talking to like about investing and stuff.
Yeah.
And she was telling me like if I wanted to do like a flip, she'd be willing to put like money for it, but I didn't feel like I was ready yet.
So I can appreciate the feeling. And I know that feeling vividly because it was until I started understanding, I know this shit. I know this stuff. Like I'm looking around going, does anybody else really know this? Because if they did, maybe they saw this and they, you know, and you start like, ooh, but it's with conviction. So Brandon, what it tells me is that if you went deeper into that and you put a little extra time in to make yourself extraordinary there, chances are you'll probably have somebody that's going to back you because you just found a product that's viable. They've got money to attach it. They probably worked hard and they want somebody like you to put it in that they trust. And they don't maybe want to put it on the stock market or put it over here or lend it to their children. But the lender is somebody that's working hard in the marketplace like you, that's isolated a property of interest. I believe that firmly, literally. And if you don't, biggest thing that you could do is just find the property and say you want 5%. Take 5% equity.
Here, here.
And you know, I want nothing. I'll run this entire project. I'll take 5%. Eventually try to get that to 10, to 20. And then now you got a few bucks and you throw a commission in. But it takes discipline and understanding what it looks like to have that flow your way, and then understanding timelines.
Yeah, what she kind of wanted to do was she wanted me to, she wanted to like do the fuck with me. She
Right.
would put like the money down, but she wanted me to kind of do the work to like learn and like get into it and stuff like that.
That's amazing.
Yeah, that is.
Doable cash, that's great.
You got an opportunity. I would dive into that deeper. And you'd be surprised. Once you do one, you're going to want to do 10. And that's exactly what we talked about with the team. As soon as you do one of these, you want to do 10. You're going to wish you had the 10 in place. I tell you that when you do. So if you can build it around a really good strategy and rinse and repeat that strategy, you're probably making a pretty big impact. Your family's going to love you. People around you are. It just trickles in every direction I've seen. Go ahead, Indra.
Would that also apply to, because I know someone that has 4 businesses, they do very, very well, and he's asking me, well, he's away right now, so I'm gonna link up with him next week. Because again, I'm just reaching to all my SOIs. And he's looking to buy like multiple family homes just to rent out. He's not interested in living in them. So is that the same thing applying to that kind of investor? Or is it more like,
That's more of a brokering deal.
it's more a brokering deal?
If you
Okay.
found something and you said, I have it, remember, you have to add value, guys.
Yeah.
If you're just going to send them a property,
I
or
wasn't
her
gonna sell
property,
properties.
I'm not suggesting you are.
Yeah.
I'm trying to train everybody. If you look at it and you say, I'm just going to send properties, anybody can send properties
Exactly.
to them. If you understand value and you say, no, you isolated these properties. We go through this all the time. If you isolate the properties and we know you're dead serious, we'll do a financial evaluator for you. And we'll do that. It'll be worth the time. But when you have so many people with chaos and non-clarity, you don't want to deal with that because it wastes your time and then it drains
Yeah.
your energy. And then all of a sudden it's like, what am I doing? I don't want that. Wait, push back on everybody that's doing that and then filter through only the things that are highest reason.
Okay.
So we would do that and spend an extra whatever amount of time only if it was the case. But that's the value. And then over time, if you said, hey, I found a building, here's the analysis. And you know, I'm seeking 5% equity ownership. I'm going to operate this building as the property manager. And in 5 years, this is what I'm looking for on this, and this is what I can do. I'm also going to take half my commission, throw the other half in, and this is my earn it or whatever it is. And now I want 10%. But that's what the way you'd want to do it in that format.
Okay.
But if you seem overzealous right out the gate, I know that people don't take you serious because you don't have any track record. If
Exactly.
you sold them one, you sold them two, you brought another value to the table. He heard somebody talk about you in a good way. There's something little luck, then yeah, they jump in with you. They don't want to miss an opportunity. You follow, but everyone will send them a property. There's
Yeah,
how
of
many
course.
brokers in our area, right? You
Yeah.
you literally walk down the street and trip over brokers. It's that crazy.
Yeah.
So add value. Michael Hearn was in here yesterday, guys, with Code Red. Value. If you're not bringing value to the marketplace, you're going to get just transactionally be an agent. So what I would suggest in this, especially when running through how to add value and become a partner, is start by understanding the product. If you want to do it in single family homes, make sure you're selling single family homes. If you want to do it in multifamilies, mixed use product, make sure that those are the ones you're selling, because then you know how to sell them. Hey, no, I know the process inside and out. I sold 4 mixed use buildings last year. I know what we're going to go through here. I got an opportunity. I need a 180K. I'm going to put the rest of my commission in, another 50K in. 230, we're going to leverage the bank. I've got a lender in-house because every one of us has Chris right there. You could just go to him, Chris, I'm looking at buying an investment. Can you help me? Absolutely, he's going to say. I'll give you a special white glove treatment. And all of a sudden you know your numbers and you know everything. But you had to do a little extra work. Somebody's not doing it for you. And that's the whole thing of why I suggest education, because education will give you the knowledge to know what it is. And a little push from somebody of encouragement goes a long way. And that's what I've learned, especially for me. I need encouragement in certain areas and certain things I'm diving into that I don't know. New, right? Anything is new if you don't know it yet. So that's really important, is establish a relationship. If you're new on that, sell them a building first. Make a commission. next building, maybe you try it then. But I wouldn't try it out the gate with somebody. To me, that looks a little bit too thirsty, and it's a little bit different.
Oh no, he's reaching out to me. Like I'm not.
Yeah, just in that capacity, just understand it. But in everyone in the training capacity here, guys, it's literally just the difference between them saying, if she's going to call me again, she's going to want this, this, and this. She didn't even add value. I don't even know who she is. It's like, whoa, whoa, whoa. Establish relationship. Get to know them. Understand that they're reasonable people. You can add value, then go to the business. That's a different model.
Okay.
Totally different model. Great question.
Does anyone have a question? I want the mic. I like the mic. It's
Yeah,
pretty
we got
cute.
the mic pass.
It's a little fluffy mic.
Guys, we're going to get Real Estate Rewired back
There
on
you
Round
go.
Wheels for 1 o'clock on Wednesday. I apologize with our scheduling. Thank you for everyone for being flexible alongside it. We've got a lot of pressure on us right now. We're going through each one sequence by sequence. We're doing it with a smile, and we're very thankful, and we're very grateful for everybody here watching inside, for every one of you guys that work with us, work with me. Thank you. I appreciate every one of you. And I thank you for the flexibility from my heart to yours for that. And with that said, Real Estate Rewired.